What if I told you that most of the money in the world isn't actually real? That it's created out of thin air with just a few keystrokes on a computer by the very banks you trust with your savings? It sounds like a wild conspiracy theory, but it's actually the fundamental, mind-bending secret of modern finance. This is the story of how banks legally print money from absolutely nothing. It all revolves around a system called fractional reserve banking. The name might sound complicated, but the idea behind it is shockingly simple. Let's say you go to the bank and deposit your hard-earned money. So, what happens to the other $900? They lend it out. In that exact moment, with the click of a mouse, $900 of brand new money has just been created and injected into the economy. Think about it. Your bank account still shows you have $1,000, but now someone else has a $900 loan that they can spend. The total amount of money in the system has just expanded, but the magic trick doesn't stop there. The person who borrowed that $900 goes out and buys something: a new phone, a car part, a vacation. The seller of that item then takes that $900 and deposits it into their own bank account. Now, this second bank has a fresh deposit. So, what do? Exactly the same thing. They follow the rule. They keep 10%, which is $90, and they lend out the remaining $810, and just like that, another $810 has been created from nothing. This cycle, which economists call the money multiplier, repeats over and over again. That $810 is spent and deposited, allowing another bank to lend out $729, and then $656, and then $590. It's a cascade of credit creation. Your single, initial $1,000 deposit can ultimately lead to the creation of up to $10,000 in new money that floods the entire financial system. It's a powerful mechanism, all built upon that one original deposit. Now, this system is the engine of our modern economy. It's what makes it possible for people to get mortgages for homes, for entrepreneurs to get business loans, and for governments to fund massive projects. None of this would be possible if banks could only lend out the physical cash they actually held in their vaults. It fuels growth and innovation. But it also reveals a slightly terrifying truth. Our entire financial system is a fragile house of cards built almost entirely on debt and confidence. So, what happens if that confidence disappears? What if everyone gets scared at the same time and rushes to the bank to withdraw their real money? This is called a bank run. And because the bank only has a tiny fraction of the total deposits available in cash, they simply can't pay everyone back. The system would collapse. This isn't just a theory. It is exactly what happened during the Great Depression and what came dangerously close to happening again during the 2008 financial crisis. To prevent this kind of catastrophe, we have central banks. They act as the ultimate puppet masters, setting the reserve requirements and stepping in as a lender of last resort to stop the dominoes from falling when a crisis hits. But the fundamental nature of the system remains exactly the same. The money in your bank account is mostly just a digital promise, an entry in a spreadsheet backed not by gold or cash but by the debt of someone else. So, the next time you log into your online banking and see your balance, take a second to remember what that number really represents. It's not a stack of cash with your name on it. You're participating in a mind-bending, world-shaping magic trick happening every single second of every single day. And now, you know the secret of how money is really made. Thanks so much for watching. If you found this as fascinating as I do, make sure to hit that subscribe button for more deep dives into how our world really works. See you in the next one.